All right. Good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, May 12th. Michael Boutros with you on the good morning, Aurelia and Ty, everyone in the room. Great to see you guys. So it's been a volatile week, volatile month for that matter. We saw CPI numbers yesterday, hotter than expected, off the highs and the peaks, and you're already seeing all these calls, guys, on all the financial news publications. Has inflation peaked? Are we off the highs? Irrespective of whether we peaked or not, the question is the persistence of the inflation at these levels, right? If we stay at 6% or 7% for a prolonged period, that's just as problematic as going to 10. So we're not out of the woods yet. Certainly seeing the markets react lower. We did hit some key levels in the SPX. So on the menu for today, we're going to hit DXY, Euro, quick look at Euro, Aussie, SPX, NDX, dollar CAD, Aussie dollar, and gold. My list is pretty short. If you guys have any other questions or trade setups, feel free to throw them on the message board. These are the ones that I'm focused on at the moment. Let's jump right in. First things first, here's the DXY looks like. So for the longest time, we've been talking about 103.82. Okay, it's a 2017 high, nothing fancy. You have some slope up here as well. The next level up from there was 104.88. That's the 1999 swing high. We eventually broke it the year after, but obviously a nice pivot in price. Even if you go back all the way here, back into the 80s, big gap in price to the lower, right along that plane. So a major level of resistance just higher, 104.88. The high that we registered so far today is 104.71. Don't know how close we get. But once again, now you're talking about one more push, again higher for the dollar. So it's been, look, it's a weekly opening range break to the upside. It's been a tough grind trying to get long the dollar again. If you haven't gotten a chance to get in again, I don't blame you, and I wouldn't recommend chasing either. The setups have been pretty, sorry, let me just get this right for you. The setups have been pretty meager, trying to pick and choose your cherry pick your entries on these stretches. As it stands right now, 1, 2, 3, 4, 5, 6 days up. Right? Here's last time we saw 6 days up. A little bit of an interruption, spill before we continued. Prior to that, we saw 8 days up or 9 days up. Even that one only saw a 1 day interruption before resumption. So we're in overbought condition. You know, yes, it's marking divergence, but you can't fight that just yet. So 104.88, I don't have any levels beyond that. That's the next major big level. You're talking about 106s. There's not much price action in this range. So we're gonna have to get creative with the near-term structure. Here's what it looks like on the intraday. And this is the 4-hour chart. So again, if we take this on its face value, weekly opening range, break, should be looking for a Thursday, Friday high. See if we can't get that snap near 104.88. Questions? Did break higher in the dollar? Still just beyond uptrend resistance. Can I see where the fork comes from? Absolutely. So this is the same, this one right here you see in blue is the same one that you see here on the daily. It's the same one from last year, Ty. I haven't changed it. Right off last year's low. 1, 2, 3. That broke. And when the definitive break happened last month, it was a straight up shot. As I always tell you guys, a breach of uptrend resistance, oftentimes the sharpest part of the stretch. At this point, still can't get excited about chasing this any higher. So that's DXY. Here's what Euro looks like on the parallel. That one's breaking support as well. The last ditch effort. Well, let me show you the weekly chart first. This is the 2017 swing low. It's 103.40. That's your next major level on the downside, okay, as far as the weekly chart's concerned for Euro. Very stretch trade, very similar. If this is a break of downtrend support, this could get pretty messy even from here. But I just can't get excited about chasing Euro any lower. Here's what Euro looks like on the daily chart, okay? The last ditch effort, 103.52, just above that, 103.85. Okay, here's what it looked like. Right down here. It's the 2016 low day close and the 2016 low. It gives you a 30 pip some odd range, 103.52, 103.85. We just touched the top end of that support zone today. So conflicting signals. I just put out a piece yesterday and I told you guys earlier this week, look for a break of this near-term consolidation pattern for a tell. The near-term consolidation pattern, the weekly opening range, the monthly opening range. And in case all that wasn't enough, the monthly open right here at 105. That break shifts the focus lower, shifts the focus for a late week low, shifts the focus for a late month low. That being said, this was your first major area of support. And our last ditch effort, again, I have nothing beyond that. We have to reassess any break below 103.52. We're there. Now, here's what it looks like on the intraday chart. No change. Consolidation, 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 crunch. There's the break, accelerated shot right through 104.62. Here's the top end of that key support zone. Let me get you the 120 minute just so you can get some consistency here on a side-by-side comparison. All right, so we're there now. Soften your expectations for downside moves in the euro. Soften your expectations for upside moves in the dollar. It's not a fade, in my humble opinion, just yet, but it may be a decent fade opportunity if we grind lower into this 103.52 level and get some support. But this is big. This is big. PPI coming in as expected. Yeah, producer prices. You know, I'm not. It's really the main focus right now is on the consumer. That's basically, so, you know, again, I was doing an interview with Wall Street Journal yesterday, and we were talking about all of these various market factors that are pushing around gold and Bitcoin. And one of the things, again, that we haven't necessarily yet seen is demand destruction, which I think is in the pipeline, right? And that's where you really start to accelerate the recession calls and all that. So inflation is still the name of the story. All right, so that's euro, number 2. That's 1 and 2. No change there. Before you even ask Ty, a quick look at what the 10-year is doing. We're coming off pretty aggressively. Okay, pretty aggressively. We had an outside reversal candle. We noted that on the 9th when it happened. And you can see that outside reversals have actually been pretty fruitful here. So we're getting some follow through. Again, I wouldn't get too aggressive, wouldn't be looking too crazy, but 271 wouldn't be outside the realm of possibility. It's a basic 236 off the yearly low, nothing major. But certainly, you know, the divergence call into resistance, outside reversal, still have some more downside to go possibly here, but not looking for much. All right. Okay, that's number 3. Number 4, here's Euro Aussie. So we went over Euro, and I just wanted to touch base on Euro Aussie. Someone was asking about that here in the room. We're still holding resistance, 152.26 into 152.75. Major pivot zone in price, former swing highs, former swing lows galore. We're still holding that. Clear break of the monthly opening range, shot right up into this zone. We've been holding ever since. Here's what it looks like on the intraday chart. Just wanted to give you an update. Here's what it looked like a few nights back. So that same resistance zone right here, still holding. So curb your expectations. If I had to pick on this one, the euro short is going to be, again, a tough one for me to kind of chase, but we'll take a segue and look at Aussie in a moment, and that's where things get kind of interesting. But no change in those levels on Euro Aussie. Before I jump into Aussie, let's just keep up with this report and flush this out. SPX, here it is, Ty. We finally hit it. 39.24. We've been talking about it for months. Here it is, 2 equal legs off the high, 39.24. If this closes beyond the decline, okay, or the decline closes below 39.24, we're keeping on track on 38.12. Is the reversal in trading view indicator? Which one? Ty, which one are you talking about? What chart were you talking about? Those weren't reversals. What I was showing you here. Oh, that's just me identifying it. Yeah, this is not an indicator. This is just me dropping an arrow there as soon as I recognize the daily closes with an outside reversal. Same thing on the SPX, right? So on the SPX, very similar. Here are all these arrows. These are all just outside reversals that we've identified by eye. Nothing. Don't need anything automated with this stuff, right? So big support Okay, SPX on the daily chart looks like this. Some slope support just lower from where we are today, maybe on an intraday basis. Watch for something there. This is now going to be, you know, a pretty big level to watch on a close for the month, for the week rather, around 39.24. But this is big support. Next level down is 38.12. Resistance now 41.17 still. Bearish inval at the monthly open, right there at 41.40. Intraday looks like this. And another reason why I don't think we should want to chase per se at the SPX or equity markets lower from here at these levels. You know, here's the SPX again. Slope support. It's basic channel support. It's a third. That's a third touch, right? Parallel off resistance. One touch, two touch. Here's the third touch. So I'm looking for reaction right into the open of the U.S. trade today. If it breaks lower, 38.12 is a basic 38.2. Again, that's off the broader range from the advance from 2020. So the levels are clear. You're into the first major level of support now. Okay, on shorts, you want to reduce short exposure. You want to bring your protection, bring your stop losses down to break even or better. Like I said, if we buckle below here, 38.12 on a deeper stretch, 37.34. This could get pretty messy, guys, if this breaks below, again, downtrend support. A break of downtrend support would be very technically damaging for the immediate trend, and it would be certainly another thrust lower. Okay, so that's the SPX, no change to any of those levels. So again, daily, finally hit that target. We're there now. Slope support, boom. Look for reaction here into the US Open. All right, next up on tap is NDX. The two of the three equities that are cleaner. DJI, I'll show you the levels I have, Ty. It's kind of messy, but I'll show you what I got. First things first, here's NDX from the weekly chart down. This is also now breaking a massive level. Last week, we talked about 12,000, excuse me, 668 into 12,947. 38.2 retracement. That was last year's low week close. We gapped lower. It's a straight shot. The lows from last year was 12,208. We closed below this week. The risk is deeper. Remember, SPX has already made its two equal legs lower into the 100% extension. NDX has not. Now, it doesn't necessarily mean it has to make it. There's the non-confirmation low that you see me and Jamie identify all the time. We see it right now in gold and silver. But all things held constant, you're still on pace for 11,520, 11,768, basic 50%, two equal legs off the high. Once again, I do also want to note that if we break here and this materializes a weekly close below, that would be a break of downtrend support, would certainly suggest and risk another accelerated drop. Here's what it looks like on the NDX for the daily chart. Okay, big pivot zone, 12,166. Big pivot zone. Former swing highs, former swing lows, right? You get the 25% parallel there. Here's the break below. Could not close above it yesterday. Boom, right into that parallel. Shot lower. Still think you get 11,512, 11,520. Resistance now 12,439. Okay, 12,668. You know, I have it as a level there, but for me at this point, I'd have bullish or bearish rather inval right at the monthly open. Right at the monthly open. This retracement's null and void. We've made a new low. Don't need to wait for a high. Monthly open at 12,864 now. Near term bearish invalidation. Questions on NDX, NASDAQ. Maybe a little more to go here. Okay, that is number 6. All right, here's DJI. Here's Dow Jones. What price is breaking target at 38.12, or is it the trend line you showed? Go say that again now. On SPX, what is the price breakdown targeting 38.12? you have the trend line we are sitting on. That's the break, Ty. That's the break. So let me, I don't want to get too into the weeds with you, but if you want to get in it with me, here's what it looks like on the hourly. Here's what it looks like on the 30. Clear cut pivot. This was a level we were watching. It's a significant level from a technical standpoint. So the break here actually has us looking for resistance right into the US Open. If this resistance holds, yeah, a break of that slope, basically the lows we made yesterday, you'd start to look for this thing to possibly fall apart. Okay, it's not necessarily a lateral level here. This is totally slope, totally slope. Does that make sense? Excuse me. One other thing I'd look at is, you look at this at a 4-hour chart, nothing really. You look at it at a 2-hour chart, that's an outside reversal candle lower. Oftentimes when you see an outside reversal candle lower, that's the exhaustion trade, where the trade has tried to push higher, reversed, tried to make a new low, but if that holds, now you're talking about, okay, the bears got washed out, you look for a little bit of a bounce. Here's another outside reversal candle from the high, that's exhaustion lower. You know what I mean? Here's another outside reversal candle from the high, that's exhaustion lower. So another outside reversal candle lower at the lows, again, similar scenario, could be an exhaustion print, but at the end of the day, if that low gives out, that slope gives out, yeah, it's 38.12. All right, good question. So DJI looks like this. Again, it's the ugliest of the bit, but I do think if there's going to be a catch-up play, this is the one that's going to, catch the biggest drop here. Here's DJI on the weekly. Okay, 32,530. That's the level we drew in the sand way back here on the initial drop in February. Yeah, that's right, February. We dropped right into it. Slope was right there. Bounce, 618 retracement held resistance. Drop. Once we broke 33.5 2 weeks ago, shifted the focus back towards, once again, 32.53 right here, 32,530. We sat there. That was the lows that we made last week. Here's this week's candle. So if I look at a trade like this and I look at it from the weekly chart, inherently, I'm looking for 30,800, 30,812, right? Go into the daily chart. The pitch looks all right. If this break is legit, we just hit resistance looking lower. Well, that's 38,812 as well. Maybe a medium-term pivot right here, but that looks like it just broke as well. All right. Well, jump into it on the intraday chart. Same slope. Here's what it looks like. So, yeah, I mean, all things held constant, it looks like it's still poised for that move lower. You just now, basically, guys, over the last 24 hours, broke the yearly lows. SPX broke the yearly lows. NDX broke the yearly lows. In fact, SPX is almost looking to break last year's low, right? So we're in territory where if it's going to play catch up, yeah, I think DJI has a ways to go. And if that's going to hit, 30,812 is going to be my first major level of support on the downside. Ty, does that make sense? Intraday. All right. Playing it. Nice. Well done. He says yes. Okay, keep it up. That's DJI number 7. Let's go ahead and jump into some of the meteor dollar prospect trades. And here's dollar CAD. So another one, no change to any of the levels from the SPX or NDX. All you've done is basically attempt to break here. Again, still looking for that 100% extension there in the NDX. Preview to that was dollar CAD. This was back on the 9th. We were talking about dollar CAD resistance right into the uptrend and the risk that posed. It was a beautiful short. Okay. Hey man, great to see you in the room. Says hello, Mike. Hope all is perfect. Great to see you as always. So dollar CAD was one of those trades where we were looking for resistance on account of all different time frames. Here's was the weekly chart. You had the 2018 open at 29.75. More importantly, that 38.2, the entire 2020 drop gave you 30.23. Okay, we're still there now, right? This is on the back of like a 7-week advance. And certainly this is a major pivot in price. Here's what it looks like on the daily chart. Okay, 38.2, 30.23. We also had uptrend resistance. So on the daily chart, this is the same pitchfork we were following again, guys, from last year. Modified pitchfork. 1, 2, 3. There it is. All right. So again, doesn't necessarily mean it's a bearish trade per se, but the long trend is at resistance. So if you're a trend trader looking for that pullback, 29, 28.75 would have been like a really nice spot. If you're a near-term guy, you're possibly looking to play exhaustion to the downside. But all things held constant, you need that buckle and pop above 30.50, right? 30.23 on a close basis to unleash the next upside towards 32.30. But as it stands, well, we're at resistance. Well, what does it look like on the near term? Here's what it looks like on the intraday chart. And again, just brilliance in the levels. Again, they're not my levels, just the market's levels. I'm helping you find them, but they're working out pretty damn good. Resistance, resistance, resistance. Was in a little short here yesterday, peeled off half at 29.50, and then went break even on the rest, and then it just took me out break even on the pop. So still possible scenario where you could still get another snap at it. Maybe you push higher into the slope and you get another track of that parallel before you break lower. I don't know. But at the end of the day, guys, the weekly opening range is preserved. Here's your Monday, Tuesday stretch. That's why I tweeted at you guys yesterday. I didn't have anything new because there's a lot of weekly opening ranges that are still preserved. Euro is still preserved into last night. That just broke. Dollar CAD still preserved, right? Despite that dollar weakness, that dollar strength, you're not seeing dollar CAD able to push this resistance. Again, I think that's a tell that we need to pay attention to. So dollar CAD still trading into uptrend resistance. You need a breach above that slope, in which case you're looking for 31.72 and 32.30s. Near-term support, again, 29.50. I still have it as a soft target. That's the 2019 low, but it's this zone right here into the 29 handle. It's going to be the bigger one. 29 also, by the way, guys, is the weekly open. I think it's 29.01, 29.02. So really clean levels. Questions on dollar CAD? All right, that is number 8. Number 9, Aussie, another one I really do like as well. I was thinking we'd get a larger rebound. I wasn't in this yesterday, but I assumed the same exact trade would have happened as I was in dollar CAD. It would have gotten whipped out on the rest here. Look, it's all about the weekly close for Aussie. It's all about the weekly close. We've talked about 69, 90, 70 for months, for years. Hell, it was the 2020 Open. Resistance, breakout, support, support, last year's low, this year's low, slope. So we broke lower, we recovered back above yesterday, and again, to me, I was starting to think, well, maybe that's the exhaustion trade. Maybe you get the rebound. Thankfully, I didn't get in it. Again, I was already positioned in dollar CAD. I don't like to, double up on dollar exposure, but here we are back below 69.90. Look, this is a key level. If we've settled today below this level, if we settle tomorrow below this level, specifically into the close of the week, sayonara, 66.60s. Ahead of that, maybe you got slope near 67.50, 67.60s, but you're looking for 66.60s. Big, big, big level. So, man, Aussie's in trouble. Aussie's in trouble. Here's what it looks like on the daily chart. This could still all be some massive fake out, right? But here's what the daily looks like. We've closed 3 daily closes below that critical zone already at 70 into the 69.90s level. So even if today recovers, that's resistance. That's resistance, okay? Bearish invalidation now drops to the objective monthly open. That's like 70.67. And downside levels from here is 68.27 and 67.56. Here and here. Okay, here's what it looks like on the intraday. We're just riding that thing lower. Now, one thing I would look for on a trade like today is, well, Mike, here's an objective weekly opening range. You set a low, you test a high, you got the weekly opening range set into Thursday. Isn't this a break of the weekly opening range? Haha, it is. However, you're not seeing the accelerated drop that you'd expect to see. In fact, on a move like that, a break of downtrend support, I would expect to see this slingshot pretty quick today. So the tell, we go into the US trade session, we recover and close Europe back above 69. Again, to me, that's exhaustion, right? Here's divergence. If 69 holds resistance, I mean, you're still right on pace. 68.33 and 67.74, the next downside levels. Any questions on Aussie? Okay. It's interesting you should ask, Ty. Can you do gold and silver early? Got to go to the doctor. Oh, yes, I'm on gold next, brother. Here it is, number 10. Here's gold. So gold, I gave a whole outlook to the IG folks there yesterday about gold. Listen, so for weeks and for months, we've been talking about two key zones, 1818 and 1828 and 1850. Both critical levels of support. Specifically, if 1818 gives out, if that breaks, it's damning. It's damning for gold. That's multi-year uptrend support break. That's a break below the 52-week moving average. That's a break below the 618 retracement of last year's rally. That's even a break below 2 equal legs. So that would prove this is not corrective and we're on a larger trend reversal. That being said, Ty, I'm looking for a low in gold, to put things simply. All right. Jamie made a great case as well. The non-confirmation low we're seeing in silver. Silver is driving into its support, but you've already seen silver take out the lows from last year. Gold's nowhere near the lows even from this year. So a possibility there that you're seeing the exhaustion stretch. For me, it's about the near-term charts, but all I want to tell you is into the close of the week, we're looking for a low above this level. That's critical. That's super, super critical. Okay, we need to close above this level. Now, if we zoom this into the daily chart, it looks like this. Okay, a little messier. This is the same pitchfork we've been following since last year. Here's slope support. Okay, if I take a parallel of that slope and I extend it to the lows here, all right, maybe we're dangling there still. But at the end of the day, it's either here or here that I'm looking for an exhaustion low. Now, this is already kind of spent, 1850, because we're straddling it. That's not going to be a very conviction low. So I do think you get one more stretch, maybe another tag, maybe a drive into it, but that's the pivot point. That's the pivot point. If you're holding shorts and you're bearish gold, like that should be your main level. Did we get a break of that trend line? So Ty, you did get a break of the trend line, and if you look at it from a closed basis, it's actually a break and test of resistance. So all things held constant, if I was like a purist technical analyst, I'd say that's, you still got to get that drive towards 1818. Being a realist in the market that we're holding right now, it's still, if the dollar pulls back and we get the final sort of flush out there, yeah, I think we could find a low here. Could find a low. And that's what I'm looking for. And unfortunately, guys, you don't know the lows in until you've made it, right? You're not going to catch the low. That's not what we try to do. That's a fool's errand. I never target you guys to try to catch the low. It's being aware of when and where that is vulnerable, that possibility rises. And this is the zone. And over the next couple of days is the time that we're looking for some sort of reaction. Here's what it looks like on the intraday chart. So jump out to the 240 here, just to give you a zoom out, and you can see, like, what do you want to do with that? What do you want to do with that? You want to short that? You want to buy that knowing we haven't necessarily rebounded off support yet? No, I don't want to do that. Ty's short from 1920. That's because that was a great break, Ty. Amen. Well done. But this is where you want to start to clean things up. Okay, this is where you want to start to clean things up. This is a big zone. Big zone. All right. Sold at 1955 also. Ty, I think you mean 1855. We were at 1955 last night. The high, 1955. Wow, well done. Well done. Yeah, 1855. So look, don't get too comfortable in there. Okay. On the 1855 level, you know, that's for me, stop against maybe that swing high, stop again, a break even stop if anything. This is butter. This is really, really critical down there. All right, and silver, I don't have a near-term setup that's of merit here, but that channel is ridiculous, right? We're still not necessarily at support there. Similar scenario, maybe a little bit drive lower, but on the weekly chart, you know, that's a big pivot for me. 50% retrace, former swing highs from back here in 2016. Okay, big level. Okay, so that is gold and silver, and that's everything on my list. Do let me know if you guys have any other questions or trade setups to throw on the message board. I do want to just say a quick note, guys. Woo-wee! I hope you're looking at Bitcoin. Okay, so 2 levels that we talked about in Bitcoin that were like, hey, keep an eye out. Once this broke right here on the 5th, it was game over. Game over. That's the August lows. That was a multi-month uptrend support. That was the monthly open break. That was the monthly opening range break, right? The first 2 major levels that we talked about was right here at 28,700, 28,900, and then down at 25,850. Look where this just hit. You can't make this up. It's the 1618 extension from the decline off the high, from the record high. Okay, we just bounced off it, and we're like, what? Man, we're like $4,000, $3,000 off the lows already. So look, again, I'm not saying that's the low, but what I am saying is that's the last ditch effort before you start to see disaster in crypto. Okay, anything beyond 25,850, I really don't have anything there until 19,666. 17,792. I mean, those are soft targets. The bigger ones are down here. Even if this is a corrective move off the high, you're basically looking for like 12,000. Huge, huge decline. So the pain may still actually intensify. As it stands now, though, could get a little bit of a respite. Could get a little bit of a respite. So it kind of jives with what we're talking about with, you know, the dollar's pushing higher, but man, we're at uptrend resistance. Euro's pressing lower, but we're at downtrend support, you know. So Aussie pressing lower, you know, and the break below 70 is pretty profound. So I still think Aussie's got the downside. So all of these trades may be a little bit of a respite. Boy, oh boy, for Bitcoin, anything sub 25,850, it's likely to be disastrous. So quick note there. What is the resistance? Is 37,300? Yeah, so 37,300 EMAN is bearish inval, unfortunately. Near-term resistance, I still have 32,000. That's the low day close from the January. That's 2021, actually, the yearly low day close. So you can see the last 3 days, last 2 days, we actually saw resistance there. So that's initial resistance. This is the low day close from January. I don't necessarily want to stress that, but 37.3 is bearish inval, and just above 37.3 is the monthly open too. So you got trend line, you got the monthly open, you got the 75% parallel in blue. All of that converges right there. What is your opinion? Please, appreciate it. So on Bitcoin, so man, I still hold some Bitcoin. It's just an ancillary position. If you're looking to trade it, it's not my cup of tea here. I still think it goes lower. I still think it goes lower. It might be in my humble opinion, again, it's going to be a great opportunity. But listen, guys, the market outlook has turned sour. We have high inflation. More, in my humble opinion, bigger than the inflation problem is the energy problem. And as energy prices continue to stubbornly persist at a higher level, this is going to filter down into consumer prices. I don't even think that filter has happened yet. We haven't even seen that trickle down. So the inflationary pressures there, higher energy prices are there. Obviously, you have the situation in a developing possible, you know, war. The market outlook is not so good, right? You have all of the stimulus measures that were poured into the economy all tapering off and ending. So things are slowing down. One of the first assets, in my humble opinion, that are going to be dropped is crypto. If you have a large portfolio and you're well diversified, and all of a sudden you see really bad horizon coming out, what's the first thing you're going to drop is your higher risk assets. And crypto, unfortunately, is going to be those first ones, in my opinion, to get shut off. And this is why you're seeing, and in fact, this is one of the conversations I was having with, WSJ yesterday was, you're seeing crypto brokerages really take a hit. I mean, their stocks have just been massacred. And the question is, why did that happen prior to the massive sell? Well, because again, that's the first thing to go in market recessions and market turndowns. So it's not a surprise. I do think it's going to bottom out, and the blockchain story, Eman, that hasn't changed. I think that's going to be on solid footing for the future, for the foregoing future. But Bitcoin, as a store of wealth, as as an inflationary hedge, which some people said, which is ridiculous, that kind of bid for it has started to wane. So long story, again, man, you're asking my humble opinion. Long story, I think it's going to be a buying opportunity, but you need to see a massive washout. You need to see people say, oh, Bitcoin's done. That's it. The market's, and that's actually probably when the low's in. But right now, you're still seeing stories about, oh, millions lost and all that. Yeah, it's probably more to go. All right, this is my humble opinion. Throw it out there, man. I always give you what I think. Too many pressures to count, says Ty. China closed for over 8 weeks, no shipping out, no diesel, farming problems, destruction of domestic oil industry, Bitcoin, not an inflationary hedge, as a stock with no earnings, and a stock with no earnings. Yeah, so I would agree with all those comments, Ty. I don't like playing doom and gloom. I don't like being the guy on Twitter saying all these negative aspects. I just trade what I see. I don't care about the headlines. And what I see from market outlook, from demand destruction, which is, I think, on the way, and then with all the supply chain problems you noted, farming is going to be huge. Guys, energy price, again, oil is used in the production of fertilizer. Fertilizer prices are going through the roof. If you can't have fertilizer, the yield of the crop is not going to be good. If the yield of the crop is not going to be good, you're going to have a lower supply. If the lower supply is going to be there, it's going to be higher prices. Add to that all the problems that we just noted with higher inflation and labor cost problems and all this issue. So no, I am not super bullish current, and people keep dropping and saying, well, earnings reports are good. Earnings reports are good. That's true, but again, that's an environment where you had an insane amount of government fiscal, injections, liquidity injections, and on top of that, you haven't necessarily seen supply or demand destruction, which I think is going to be the biggest thing. Grain shortage in Ukraine and Russia, right? One of the two largest producers of fertilizer, one of the two largest producers of wheat. So, guys, don't follow the headlines. Follow what you see happening in price. Markets are obviously repricing, and if we could go, I could take you through the stock portfolio that I track, and it's 2446. I think I talked to you about this when we first gapped lower. That was the 618, the entire rally from 2020. That was downtrend support in Amazon. Once it broke, straight shot to hell. Here we are, 2085. I think you get maybe 1870. Huge, massive breakdown. You don't believe that? Apple, 150 was the level. Here's what happened when 150 gave out. Straight shot to hell. Big region, 38.2 of the 2020 rally, right? The yearly low that we put in back in March. Uptrend support. 1, 2, 3, break. That's happening today, guys. So, I mean, again, even banks, right? You think banks, oh, higher rates, that's going to be beneficial for banks. Not everything's getting washed out with the bathwater, right? The baby's getting washed out. So, stay objective to what you're seeing in price. Don't go trying to catch the low. The markets are in correction. We are in a larger downtrend now. There is a mouth talk everywhere saying everything in the future is going to be paid through digital gold. What do you think? I think it's just what you just said. It's just mouth talking, amen. I tried not to even take things into account. It makes for good cooler talk. It makes for good roundtable discussions, and I'm sure the guys on the fundy guys on Daily Effects will have things about it. But from a trading standpoint, I don't really put too much merit on it. I try to take every trade based on its own merits, on its own price action. If there's something in the fundamental realm that's going to impact that, maybe. But all you need is the charts. Ty saying, are these charts overnight action as well? No, they don't. Most of these charts, especially with the SPX and stuff, no, they'll open up at the cash market. It's not E-mini futures is what you want to be looking at to see overnight. Okay, any other questions? If not, we'll go ahead and wrap it up there. Best of luck trading into the close of the week, guys. Tomorrow there's Michigan consumer confidence data. It's actually supposed to come in a little bit worse than we got last month. 64 is the read. Marcin, dollar Swiss and Euro CAD. Dollar Swiss, haven't looked at. Geez, this thing is so here's dollar Swiss, Marcin. Leave it to Marcin to give me the stretchers. Man, that is what a rip. So look, these are the levels. I think you asked about this last week. I mapped out those top side levels, but look, parity is obviously going to be your resistance here. I have parity 27 as a level. As the highs that we made back here in 2019. 2018 high close is 101.08, so basically 101. Look, on an objective basis, this breach would be a break of what, Marcin? The weekly opening range high on Thursday. You look for a stretch into a Thursday, Friday high. That's the objective look. My problem is, what the hell are you going to do here? You're going to buy? You're going to buy at fresh multi-month, multi-year highs? So from a trading standpoint, I got nothing. I'd be looking for either a spike into 102, into parity rather, one spot 02, or some sort of washout to get back long again. For me, if there's no structure to the trade, I don't even bother looking. What's the point? It's a runaway. Like, what do you want to do with that? Maybe if we spike into that might be an exhaustive trade. You're up how many days in a row now? Well, yesterday was a down day, but you're up 1, 2, 3, 4, 5, 6th week. So look for that. All right. At the end of the day, the one thing I would say about dollar Swiss is it's very clear on the downside. 98.76. That's your objective weekly open and the objective weekly opening range low. So aside from what Mike Boutros thinks, what Jamie thinks, that would be an objective short signal if you break 98.76 on the downside. And again, forget that for now. Actually, no, keep that. Forget this for now. Here's your weekly opening range high. Hasn't even broken yet. So look for a break of this immediate range. That's your breakout zone. That's when you would start to see an accelerated pop even further. But look for a reaction here. Look for a reaction here near term. Ty, feel free. Send me a chart anytime. Euro Aussie looks like this. Oh, I'm sorry. You said Euro CAD. I showed you Euro Aussie. Euro CAD. So that's the daily chart. Outside reversal. Off the lows. It's tempting. It still looks pretty exhausted on the downside. I wouldn't want to, I wouldn't want to try to fight this, but at the same time, I don't have a level necessarily of why we're rebounding here. Could be some sort of near-term bottoming. I'm sure people are already calling the inverse head and shoulders, but Yeah, I wouldn't have a strong opinion on this one. Wouldn't have a strong opinion on this one, Martin. You're more than welcome. He says more. Yeah, thanks. You're more than welcome. More than welcome. Okay, so guys, we'll go ahead and wrap it up there. Like I said, best of luck trading. Keep your eye on Michigan consumer confidence tomorrow. Keep your eyes on the SB Trade Desk homepage for announcements. For anything new that's coming on, I'll be on the homepage there this weekend. And I will see you guys on Monday on Daily FX for the free session, right back here on SB on Tuesday and Thursday. Have a great weekend, guys. Cheers. God bless.